All right. Well, welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack. It's my honor to be bringing this message to you on the week after Thanksgiving. Trust everyone had a great Thanksgiving. We know that it is a lovely privilege to be in the United States where we can celebrate our freedoms, and we give thanks to God for that. And so we prepare ourselves also for the holiday season coming. It's a great time here, but it is also a time of transition. Obviously, you guys are aware there is a transition of leadership here in the States. And so today we're going to be unpacking one of the possible outcomes of the transition, which is a zero federal income tax policy. Now, before we get into that and all of the likelihood and all of the results or consequences that can come from that, I want to encourage you and ask you, if you get any sort of value out of this, to leave us a 5-star rating and review. If you haven't yet subscribed to our page on YouTube, Spotify, Apple Podcasts, wherever you are listening, go ahead and do that. Follow me on Instagram to see some more short form content. Also, you can find that on YouTube as well. We're really growing out our video platforms here, and we'd love for you to be a part of it to help us get more in the eyes and ears of listeners just like yourself. So I thank you for being open to that. I thank you for listening or watching wherever you are, and hope and pray that this can be a valuable time for you. I know time is the one thing all of us have a limited amount of, so for you to be sharing your time with me is quite an honor, and don't take that lightly. So today we're going to be evaluating the proposed zero income tax. I've received a few questions about what the implications would be as a CPA. Would I be out of a business, out of a job? And also for taxpayers, what would the implications be? So we're going to be talking about that. And where it comes is Trump has actually discussed this. I think he was in a barbershop of all places in the Bronx or somewhere in New York City, and somebody asked him about it. And Trump said, it's possible. It's been done in the past. We're thinking about doing it. JD Vance, on the other hand, has been on the record in a media interview. I don't know which one, but he said it's pretty unrealistic that it would take place. But regardless, the topic of conversation is coming up, which is something that has great impact on us, obviously from a business standpoint, but also us as a taxpayer. It has great impact on you, the listener or the viewer, as a taxpayer. So here we're going to be diving in to all of the implications and what you should be aware of. Not really going to get into the likelihood, but I will take some historical evidence about whether it would actually work or not. And so this could be a very exciting episode for you. So before we get into the actual proposal that Trump has put forth, I think it helps to go back in time a little bit and understand the history of income taxes. What is it? How long has it been around? Obviously, from a citizen's perspective, it might not be obvious to you, but taxes are found in the most historical document we have, which is the Bible. Jesus is famous for saying, pay taxes to Caesar and render to God what is God's, meaning pay what you owe to the people that you owe. St. Paul, the Apostle Paul, also discussed this in his book to the Romans. He said that we have to be subject to authority because the authorities have been in place to reward good and punish evil. And wherever you stand on the religious or spiritual spectrum, understand that the Bible is a historical document. And so we can go to it to see what certain parts of this world were like 2,000, 3,000 years ago, right? The ancient Egyptians, the ancient Romans, the people groups out there in the Middle Eastern community, the Israelites, right? And so we know that those governments had instilled, the Romans in particular, had instilled a tax system, right? He was asked by a Jew, I believe it was, whether they should pay their taxes because Caesar was notorious for persecuting Jews and running a totalitarian state, a dictator rule, an authoritarian rule. And so the Jewish people asked Jesus, who claimed to be Lord in the flesh, who claimed to be God in the flesh, whether they should pay taxes to this oppressive ruler. And Jesus said, whose inscription is on the coin? Who are you looking at when you look down at the coin? And it was Caesar. And so he said to pay to Caesar what is Caesar's and render to God what is God. So from a religious standpoint, from a spiritual standpoint, from a moral standpoint, it is good and right to pay taxes, the taxes that are the correct amount. You shouldn't overpay taxes. It's not good or moral or right to overpay taxes. But when you know that the amount of taxes you owe and that you're paying is the correct amount, it's good to pay that because God has put these people into authority. He's sovereign over all. Now that's a ancient history perspective, but here in the United States, we have a more recent history, right? We're about to be celebrating 250 years coming in 2026 since the independence was declared, 1776. And so we do want to take a look, as all of our tax advice is in regards to the American citizens, right? We're CPAs here in the United States of America. We have our expertise in the Internal Revenue Code as stated here in the America, and it's here in America that Trump is possibly proposing a zero federal income tax. So we're going to be talking about it. And again, it helps to look from an American history perspective. What are taxes? How long have they been around? Has it always been what we now know it as? And the short answer is that it has not always been what we currently understand as income taxes. And when you look back on history, we actually pay a lot more in taxes than we did in the prior 2 centuries, really. We'll find out from like 1913 about to present day is when taxes really started to take the shape that they currently hold. And before that, it was very little in taxes. And mind you, the American Revolution happened because the people felt they were being taxed unethically. They were being oppressed in the form of taxes on tea of all things. And so taxes were not something that they enjoyed, let alone wanted to instill on their citizens, but there are rules and laws and legislation that is in place to allow taxes to take place. So the Constitution, one of America's founding documents, a great piece of literature if you are able to understand it, Constitution gives Congress the power to impose taxes and levies on the general public. So by law, the government is not overreaching their authority by imposing taxes and levies on the general public. And that goes for the United States Congress. And I believe the states are also granted authority to impose taxes on their people, which is obviously true because you have state taxes in here in Minnesota, but you don't have state taxes in Texas. You have state taxes in Connecticut or Massachusetts, but you don't have state taxes in Florida. So each state also has the ability to impose taxes on their people, and they can do it for as little or as much, as far as I know, as they please. So income taxes have been around for much of our history. The US was free from federal income tax for much of its history. So I referenced this, right? Jesus in ancient Rome, so the early centuries BC up until AD, which means year of our Lord in Latin, there was an income tax there. So from 0 BC, call it, there was an income tax. And governments since then, and probably governments before then, have been using taxes in a variety of ways. So taxes are not new from an American standpoint or a British standpoint or a modern day government standpoint. They've been around since really the beginning of time as far as we know it. But taxes in the US have not been what they are currently. We were free from federal income tax for much of our history, which might be a surprise to you. Now we have federal income taxes as one of the biggest expenses of our lifetime. 150 years ago, there was no federal income tax. Up until 1913, which we'll get into here, the federal income tax was not a thing. They used to tax things like alcohol or sugar or tobacco. They referred to them as sin taxes. So it was a tax on things that they deemed to be immoral or things that they deemed to be harmful to your health. So there was a tax on certain things like alcohol or sugar or cigarettes, but there was not necessarily a tax on the income you make. Nowadays, we're doing everything we can to get the taxes to a lower level because the taxes they seem to be a large part of our money outflow. And they are. If you look at wherever you stand on the income standpoint, if you look at your W-2, if you have a W-2, the taxes are going to make up more of your paycheck than probably the rent or the mortgage or the groceries or the insurance. Like taxes, if you have $100,000, depending on where you stand, say you're in the 24% tax bracket, that's $24,000 that you're going to be paying in taxes. And how much do you pay on rent for a 1-bedroom or for a family of 4, right? It could be that you pay less than that in rent or mortgage, certainly in interest, than you do in taxes. And this is in a country where there was no tax for the large majority of the history. So flashback to the Civil War, so 1860s, call it. This was the beginning of the income tax and what we now refer to as the IRS. Up until then, the states were responsible for enacting taxes on the citizens and passing it to the federal government. So the states, Minnesota, for example, Massachusetts, Connecticut, they would tax their citizens a level that they deemed to be what they thought was good and right and honorable. And then they would pass this to the federal government. All of the money from the states would be pulled together and they would deploy it as needed. But there weren't as many expenses needed from my understanding, right? We didn't have such a presence on the world level, right? We weren't funding wars of other countries, i.e. Ukraine and Russia, or 20 years ago, what they were doing in the Middle East, right? We were very much focused on what was going on our land. And if it was okay, we would continue to operate it as normal. If it needed fixing, then we would tap into the money that we had. And so this is what they were doing. The states would tax their citizens and then pass the money onto the federal government. The Civil War comes and they now need money to fund a war, right? The the men were responsible for going out and fighting, and now you have families, women and children, that are left without a provider, without money to go out in the marketplace. And I'm sure that the government saw this, and they saw that their people needed some form of provision, and so they started taxing their people. So this is the Civil War era. Shortly after the war ends, the tax is repealed, and it's not until 1913 when I believe World War I started to take effect. And now you're looking at a war on a worldly scale. You're working at a multinational war that the United States is involved in. And so we need to fund that. We need to fund the soldiers. We need to fund the families whose soldiers are no longer working. We need to fund the planes and the vehicles that are being used out there. We need to produce more from a military perspective so that we can win this war and that we can fight on behalf of the Allies. So in 1913, this was enacted to help pay for World War I. Here are the tax brackets. And you might want to sit down because this is going to rock your socks. $0 to $20,000. If you make income of $0 to $20,000 in 1913, you're in the 1% tax bracket. 1%. So if you made $20,000, 1% of $20,000, how much is that? $200. You would pay $200 in taxes, and you would have $19,800 to live off of. And mind you, this is 1913 dollars. So that goes a lot further than it does today. $20,000 to $50,000, 2% tax bracket. So if you make $50,000, 2% of $50,000 is about $1,000, right? $50,000, 2%, $1,000. You owe $1,000 in taxes. You now have $49,000 to live off of. 50 to 75,000, 3%. 75 to 100,000, 4%. 100 to 250,000, 5%. 250 to 500,000, 6%. 500,000 plus 7%. So it was gradual. If you were in these tax brackets, it was 1 to 2%, 2 to 3%, 3 to 4%, 4 to 5%, 5 to 6%, 6 to 7%. And then if you're over 500,000, the most you can pay is 7%. Now we have percentages like 39% or 37% or 32% or 24%. And that's low for this standard, right? Now, since 1913, the tax brackets have gotten way too out of control, if you ask me. At some points, they've been upwards of 90%, I believe, in the 1930s, 1940s, maybe. Great Depression area or sometime after that. Don't quote me on that. But this is what we're dealing with. The federal income tax was not something that was seen as an everyday expense until 1913. And even when it was in 1913, when, mind you, there's a world war that they have to fund and that they're putting money into, they're only collecting 1 to 7% of their citizens' income. Nowadays, it's 10 to 37%. So just a note here, the first personal income tax was enacted by Congress in 1861 to raise revenue for Civil War. It was then repealed in 1872 and reestablished in 1913 to help pay for World War I. It seems the taxes, both the original and the reestablished, were enacted as a result of wars. So wars cost money. Obviously, you need to pay your soldiers. You need to pay for the equipment. You need to pay for the guns. You need to pay for the food. You need to support these men who are going out and risking their lives for the freedom of their nation. And so you need to support them. But nowadays, it seems that we're tied in. We don't have any wars on our soil. Thank God and God forbid. But we do now find ourselves in the middle of wars on other people's soil. And it also seems that a lot of the tax dollars that they're collecting, whether or not they have a war, are going to support the military and the defense. And there's massive contracts that are out there for defense producers, right? For people that are producing weapons or supplies or materials for our soldiers, for our wars. And so I am the biggest believer in our military. We have a lot of men and women as clients who are risking their lives for this country. But it begs the question, if we started the federal income tax for the Civil War and for World War I, for wars, in order to provide for them, provide for the common defense, if you will, then what are we doing in those times without war? And are we taxing our citizens too much and losing the vision of what this tax system was originally to increase the pockets of companies that might not have our best interest in mind, to increase the politicians that might not have our best interest in mind, right? There's a lot of questions that this brings up. And if we have a general understanding of history and what the income tax is, then we can understand, okay, do we need the federal income tax? And this is coming from a CPA whose career, whose business, whose job relies on there being taxes and tax strategy to save on taxes. So what can we conclude? All right, remember, this is what a zero income tax would look like, $0 federal income tax, right? Trump has proposed this off air, if you will. And again, he said this in a comment with people at a barbershop, right? Local business owners in New York City and the Bronx and wherever they were. But the point being, when he says that we can actually repeal federal income tax, there are people who raise a red flag and say, what the heck is he talking about? There's no way. How are we going to pay for roads and education and the CIA and the FBI FBI and all these federal bureaucracies that serve the common good, what are we going to do? Well, when you look back at history, those organizations weren't always necessary, right? And maybe they are more necessary with technology and the increase of absolute deadly warfare. But the point being is Trump's proposal is not just zero income tax. We're not going to raise any money. He says we can enact a $0 federal income tax on the US citizens, and then we can enact tariffs on other countries that aren't producing their goods in the United States or are acting against United States interests, right? We've seen this with Mexico and Canada. He said, if you guys don't figure out the border or don't help us figure out the border and the drug overdoses that are coming over or coming into our nation because of issues with the border or just bad actors in our country, if you, Mexico and Canada, don't help us with that, well, we're going to enact a 10, 15, 20% tariff on everything that you guys take from our country or anything that you bring into our country. And immediately, the Prime Minister, I believe it's Prime Minister Trudeau of Canada, said we're going to have a discussion. We're open to talking about these things. The President of Mexico may or may not have been on the same page, but the point being is that by taking away federal income tax, it's not like he has zero plan to raise revenue for the United States. The tariffs were the same thing that they used on other countries prior to having a federal income tax. A lot of the public good money was produced through the form of tariffs on other countries because they said, listen, we just traveled over the waters. We can do what we are called to do here in the United States without having to go to other nations to do so. And that's kind of the vision that President Trump has. Whether you like him or not, that's where this is going. But the question is a $0 federal income tax possible? The answer is yes. It's been done in the past, and he plans to continue to raise revenue by raising tariffs on other countries. And then it asks, okay, what are we to do with all the money that we're no longer spending because we aren't raising income taxes? Okay, well, first is, where is that money going in the first place? Is it going to massive defense contracts? Is it going to massive lobbyists or companies that aren't working in the best interest? I do believe that there's going to be a greater accountability for every dollar that the United States brings in as a result of this new administration, which could give ever more reason to lower income taxes. If we have $5 billion that are going out the door that need to be going out the door anymore, then that's $5 billion of taxes that we don't have to raise, and that's a good thing for the American people. Now, $0 federal income tax, what would that mean for a CPA like myself, for accounting businesses, for people that are in this industry of strategically planning around the financial areas so that their clients aren't overwhelmed or confused or frustrated with the tax code and the amount of money they're shelling out to the US government? Well, for one, we could just go out of business, but I don't think that's coming. I believe, and I'm sure financial responsibility is still a necessity regardless of whether there's an income tax, right? Because if you have followed along with our philosophy, if you have $30,000 that you're giving to the US government, you're paying that in taxes, and now you know that you're keeping $30,000, well, you're going to find a place to deploy that $30,000 whether you like it or not. You're going to go take it and you're going to spend it at the bar or the casino or on a luxurious vacation. You might not use it for the best of your business interest, the best of your family's interest. And so an accountability partner, that is what accounting is, right? It's a finding the responsibilities of what you're doing with your money. That is still going to be needed, right? Somebody coming into your business always has an independent view and is able to tell you what is or is not going on that you might not see just because you're involved in it, right? There's that idea of inherent bias, right? You are spending the money. So you're paying $5,000 for a mastermind that you might not be getting $5,000 worth of value back in, but you might have some emotional attachment to that mastermind. And so to have somebody independent of your beliefs, your thoughts, your actions come in and say, hey, that $5,000, that was $5,000 saved in taxes. Is that the best place to put it? That's still going to be necessary. And then projections and CFO and ideas and financial creativity, what you can do with money that will help you generate the most value, produce the most, create the most value for your clients, your customers. That's still going to be necessary. And that comes with somebody with a financial intellect that is usually found in this accounting and tax world. So yeah, zero federal income tax might have, it's going to cause a hiccup in the tax and accounting industry, but those who are ready or prepared or know that it's a possible threat will also be ready and prepared for it to be a possible opportunity, right? There's going to be gaps in the marketplace that are going to need to be filled for people that have this idea of how can we get the best bang for our buck? How can we serve our clients to the best of our ability, produce the most, and continue to grow it and multiply it, which is a God-given responsibility, if you will. It was the first command, be fruitful and multiply. And so through that, I believe that there's always something that you can do as a business owner, whether it's a tax business owner, whether it's a contractor, whether it's a real estate investor, whether it's a real estate agent, wherever you are, there's always opportunity and there's always threats lingering, right? It's like, what happens if the entire real estate industry collapses like it did in 08, what are you going to do? Are you going to completely run from the industry? Maybe that might be the best bet. Or are you going to double down and see where the opportunity lies and play the long game and see what comes of it? Because even if there is a zero federal income tax, something tells me that it won't be long lasted unless it's in the books as this is what taxes are used for and this is what we need to do with it. I find it hard to believe that the way things work, if something passes this year, 4 years from now, 8 years from now, 20 years from now, it won't find its way back in. And that's where we need people that have the ideas in mind and know what's going on and know what has been and what will be. And so to that point, it helps to understand that something like the zero federal income tax, what has been, has not always been around, right? We're so used to it now. Our grandparents paid it, our parents paid it, we're now paying it. But prior to them, it wasn't here, and it was really only used for the support during a war time. So whether you like it or not, it is possible. It's been done. Obviously, we live in a much more complex world, if you can, with maybe more national security risks or more need for hyper creative weapons that will provide a defense just by being there, right? But who's to say that we don't need to be spending all of that money or that we do need to be spending all of that money, right? And so repealing the federal income tax is possible. It's been done. It might be a threat to the tax industry, but for you, the listener who might not be involved in the tax industry, know that it's possible. But right now, as current law stands, your taxes are coming due. You need to strategize. You need to pay less. You need to eliminate that overwhelm and that fear that you're feeling around the IRS. And you can only do that with a tax strategist, somebody who knows the law, knows their way around it, and can help you ensure you're paying the lowest amount possible year after year after year. If you're looking for that, feel free to reach out. My name is Chris McCormack, CPA, MBA, certified tax planner, founder of Better Books, and it's an honor to be bringing this to you. Until next time, God bless you and keep moving forward.